Yesterday, we talked on some really good things. If you guys haven't watched yesterday's session, I definitely was in mode. I'm not going to lie. Like, we covered a lot of great things, such as risk management and just understanding things like, risk to reward, win rate, like how you actually make the math of these trades work. And if you guys haven't noticed, these trades that you guys are getting, whether it's from me or the other educators that have been sending things out, are very quality opportunities, right? We talked about the importance of at least making back what you risk whenever you win. And a lot of these trades have been at least 1-to-1 risk to rewards. Some have been 2-to-1, some more than that. So if you guys are taking the trades correctly, if you're letting them run to their targets, there's no reason why you should really be down. But I know some of us on this free trial are probably not in profit. It just is what it is, right? And that's why we have a free trial. That's why we want you guys to put the training wheels, right? Whether it's through a small account, a demo account, whatever the case is, because you're going to figure some things out, right? I think one thing that we definitely want to talk about, at least slightly, is a little bit of trading psychology. And these are concepts that are going to change your life, not just in trading, but even outside of trading. Because when you get into trading, guys, it's going to reveal a lot about your personal mindset when it comes to money. Because everybody, they play it cool whenever we talk about a lot of different things. But once the subject of money comes up, it could be a very uncomfortable topic for a lot of people. And these paradigms that we have about money and the way we handle things like fear and greed are really important. Now, I'm not going to get into crypto too in depth, but crypto is a really great example of showing anybody who studies the markets or whatever, the greed and fear cycle, how people react to high prices, low prices. It's really like a direct reflection of human psychology because now it's a little bit different. Like now we're seeing the banks stepping in, we're seeing big money really step into crypto, but overall, this is really like an asset class that was for a long time ran by the people, right? Like it just revealed a lot about what people thought. Like how many people didn't buy Bitcoin when it was at 16,000 and bottomed out, a year and a half ago, right? But that was the best time to do it. And now that Bitcoin's at 94 all-time highs today, a lot of people probably bought Bitcoin today. And I'm not saying that in the long run, buying a Bitcoin at 90,000 is a bad thing necessarily. But again, we always hear these things like buy low, sell high. But when you start getting things like FOMO, right? Fear of missing out, you start buying high and selling low. And so these are things that people have to overcome and get used to when they step into trading, especially day trading, right? Because we're in and out of these trades pretty fast, right? As you saw, my trade came out, I think it was maybe 30 something minutes, not even an hour. We hit our targets, ended up coming back. So it was in and out, right? A lot of these trades, you're not in there for days, weeks. You're in there for maybe a couple hours max, right? So what happens is whenever we're taking trades that are a lot more short term, which is what day trading is about, right? Being in and out of trades in a day or less, your emotions are going to spike a lot even more because you don't have a lot of time to react and to let your emotions settle. It's really different than when you're buying a stock and you let it sit there for a year. Same thing with cryptos, right? So I want to kind of touch on that. And real quick, I also want to give you guys like a free play, like something that you can choose to get involved with if you want to, because something that's really important is you have to understand, I'm not a licensed financial advisor, as you guys probably know. And if you didn't know, I am not licensed. And whenever we talk about trading, I don't play with people's money, right? I don't like to tell people, you need to do this, you need to do that. I tell people what I do. And if you think that you are willing to take a chance on what I think, up to you. Not cool. So I'm going to give a stock play, right, that I've been in, and I'll explain to you why I'm getting into it. So you can see the thought process that we're not just only day trading, but we also, as you've seen through our men's sessions, right, our crypto educators, we have ways that you can make money outside of Trade Locker, outside of just the signals that you've been getting, right? Akashx covers pretty much any angle you can think about when it comes to trading, which may resonate more with your personality to be in longer term opportunities, just different styles. All right. So if you guys are interested in, again, you don't have to take it, but if you're interested in a potential stock play, drop a yes in the chat. All right. Let's drop a yes in the chat if you guys want to know the stock play that I'm talking about. Because the stock play that I'm talking about personally, like I'm not holding it to make 10%, respectfully. Like this is a stock that I'm in to at least 10x. And I'm not saying it's gonna do that. When you if you decide to take this play, because I see people want it, you have to be willing to completely lose everything that you put into this play. Because that's what I did. Now, personally, I'm almost like triple from my entry. Like I've already tripled my investment on this, but it's still early for where I think it can get to. And that's why I'm telling you what I'm telling you. But when I took that entry, you'll understand why it was risky and you'll understand why I was willing to take the risk. But I'm telling you, whenever you get a funded account, whenever you put money into a broker, whenever you take a crypto, a stock play, the reason why, and we started with emotions, this is why I wanted to talk about emotions, is if you have not accepted the risk, truly accepted it, like accepting the risk is not, oh, you know what? I'm going to go for it. But if we're halfway to our loss, I'm going to freak out and pull out. You haven't accepted the trade. You haven't accepted the loss because all of a sudden you changed up midway through the process. And a lot of times you can see these trades will go against us and then go for us later. But you missed out on the for us part because you got scared. This happens, guys, all the time. So very important that if and when you decide to take any trades, like the ones we see in the chats, the thing I'm about to tell you right now, you have to be accepting of the loss so that you can have the peace of mind to let the process happen. All right. So let's get straight into it. I'm going to share my screen here real quick, guys. And let's close this out. All right. Cool. All right. So we're going to pull up a chart here. First and foremost, I'm not gonna get into cryptos too much because we already have our Min and some other great guys that are super specialized in that. But I'm gonna talk about one stock, and this stock is called Peloton. How many of you guys know what Peloton even is? Have you ever heard of that? Let me turn on the chat again. Sorry, I gotta like go in and out with this chat. Have you guys ever heard of Peloton? Do you know what it is? If you guys have no idea, I'll tell you. Yup, the bike, the bike. No, yeah. Okay. Yeah, so it's like a 50-50 room, okay? All right, cool. All right. I'm gonna disable the chat now. So Peloton, let's go on Google and put Peloton. This is what Peloton is right here. Peloton was basically it's not just a bike. It's like a whole tech company and idea where they basically have like either a bike, the main one that people know is the bike one, right? And it has a screen and like it'll interact with you with classes. They have like trainers that do classes on there and you can, connect a profile and there's other people that like could be in your family or your friends in whatever part of the world. And you can see like how, if they got on Peloton today, how well did they do? And like, it makes like a friendly competition, right? If you guys know about like football, there's these two guys, the Watt brothers, like TJ and JJ Watt. If you put JJ Watt Peloton commercial or whatever, yeah, this one you see 12 million views 2 weeks ago. 12 million views 2 weeks ago. Pay attention. That's not light for a bike commercial. Again, this is a company, and I'm going to explain to you something that has been doing really, really bad. This company has been a disaster these last couple of years. Now, you see what I'm saying with the emotions. You're like, whoa, why would I want to invest into a disaster? There's always opportunity in disaster, guys. There's not a lot of opportunity in things that have already went well. Everybody wants to buy Amazon now. Everybody wants to buy Tesla now. Everybody wants to buy Apple now. And it could continue to grow and get bigger and you can make some money. But like, wouldn't you have rather been there 10 years ago? The answer is obvious, right? So what the heck happened that Peloton is so bad? Well, let's zoom out and go to like a monthly time frame here so you can get like a bigger picture perspective here, okay? So Peloton during COVID was really big. Why, Rich? Well, because nobody was going to the gym during COVID. Everything was shut down. So imagine if during COVID, everybody had access to work out from home and it was in a really cool digital interactive way. Peloton at its peak had hit about $170 a share. 170 a share. Where's the share at right now? It's sitting at roughly $8. Now, when I got in it, and I've been telling like students within Akashx about this too. So again, I personally am already I'm already up on this investment. So it's even easier for me to talk about it now. And I can't change the past and go backwards in time and give you guys the entry I got at $3.50. There's just no way to do it. Can it come back to 350? Oh yeah. Can it go to zero and bankrupt and completely go out of business? Oh yeah. I'm willing to accept that risk. But why? Because for me, everything's about risk and reward. And for me, the reward is very substantial from what I can see. Now, there's two things that you guys are going to always do when you trade when it comes to doing your analysis. Okay. So there's two types of analysis. There's number one, technical analysis. And number two is fundamental analysis. All right. So does anybody in the chat can tell me what they think technical analysis is? Technical analysis. Like, what is technical analysis? I know there's some Akashx people in here. So line charting, indicators, technical is reading the charts and candlesticks. I like that answer. Yeah. Okay, so yeah, technical analysis is going to be me basically looking at the charts. Candlesticks. You want to meet the dog? All right, we'll do a meet and greet with my dog like for like 2 seconds later. Second thing is fundamental analysis. So the answer was the charts. That's what technicals are. The fundamental, what is the fundamental analysis? What is the fundamental analysis? News. Yeah, pretty much. It's just what's going on in real life. Like the charts tell you information of price and trends, but the fundamentals are rumors. Is some type of well, in this case, we're talking about a stock. So it's like what's happened with the CEOs, what's happening with the pricing of their product. Like that stuff is fundamentals when it comes to stocks. If you look at something like currencies, if you look at something like commodities like gold and silver, you're going to look more at global news, like you saw Chris just said right there, right? So like wars, changing of presidents, we saw how that affected the markets during this election. But with stocks like companies, you got to look at the leadership, their products, things that they're doing to innovate, change, whatever. All right. I'm going to leave the chat on because we're like pretty cooling right now. But the minute that we see that thing going crazy with links and stuff, I'm going to lock it up again. So let's enjoy it for now. But I appreciate the commentary back and forth. I think you guys, whoever you guys are responding in here, like you guys, you're holding your ground. You're knowing what you're talking about. So I like to see it. So those are the two things, right? So number one, and for me personally, I'm like a conspiracy guy. I'm like don't trust the media type of person. Like whether you agree with me or not, that's fine. That's just how I've always been since I was a teenager. Like I don't believe what I hear on the news. I don't believe what I see on TV. I bring this up because I lean more towards technicals than I do fundamentals in general, especially with very established things like the NASDAQ, the main thing I trade NAS. That's like index of all the major tech companies. So the technicals are very reliable. Where are technicals less reliable? Something like a meme coin in crypto, right? Like these no-name projects that just explode out of nowhere. I don't trust technicals that much with that because it's not an established real asset class, if that makes sense. So I rely mostly on technicals for like major things. Like if I trade gold, if I trade this, that, whatever. Now, fundamentals are going to play a role a lot with this stock because it's just one company. So this is very sensitive, what happens on the news. Isn't the fundamental affecting the technical? Yeah, like fundamentals obviously do play a role in anything, but the initial reaction from a news is typically the opposite. I'll give you a great example. Did NASDAQ push up a lot today or did it push down a lot today? It pushed up pretty aggressively. We're going to look at it. But you know what happened today? We had basically like something that could really push us into well, I know you're talking about Nvidia, that's very specific, but I'm saying like in general that everybody knows about, that anybody that is paying attention to the news today. What was the main thing that happened in the news today that was like a big deal? I'm sure someone's gonna say it because like it's the news. Everybody's always in tune with the news. What happened today that was like, whoa, in the news, like big time? I'm not talking about financial news. I'm talking about like world news. Ukraine, Russia bombing. Thank you. See, I don't gotta say it. Everybody is always paying attention, whether it's consciously or subconsciously. If there's a world war about to start potentially, I'm not saying that, right? But like that's what people think automatically. They're like, oh my God, bombs, Russia, US, World War III. Like it's just the first thing that everybody thinks about. So if you see that right away, the immediate thing that you would think in that situation without getting real thought into the equation is the market going to crash or do really well when you hear that? Like, just don't even overthink it. Like, if you hear that there's a potential world war, is the market going to do good or is it going to do bad? Going to do bad. But why the hell did the stock market push up today so much? This is why I don't tell you to listen to the fundamentals. Again, that's a very general statement. I'm not saying fundamentals don't matter. I'm not saying that they don't influence price in the long term. Of course, interest rates, bonds, world economic news is what drives markets. But when we're day trading, guys, like we're doing, the news is always going to have a delayed effect. If you're going to rely on news a lot of times, and again, this is a general statement because you can be very specific about very specific news with very specific things that you're trading. But in a general statement, the technicals will usually give you the truth of what price is going to do more often in quicker fashion than what the news is doing. Okay. So for this stock, I'm doing both because Peloton, again, you just saw 2 weeks ago, dropped a commercial, big NFL stars, got 12 million views, pretty big deal. Now look at this. Black Friday savings on Peloton. What's happening in about a week and a half? Black Friday. They just did a deal with Costco for the holidays. Peloton and Costco partnered during holiday season. Big deal. So that was the fundamentals. That's why I got in where I got in. Obviously, that type of news already tripled our investment damn near. But this is where now the technicals come into play here. So the idea is to get into Peloton. Now, again, Peloton, I can't really tell you it's going to pull back to $3. I don't think it will. I think this $8 to $7 price range right here, and this is where technicals comes in. You can see we had like this little support area turned into resistance. I don't like using those terms for my trading, but you know, it's just the easy way to explain it. Like you can see this is a key level is what I call this. It's a key level. Why is this a key level? Well, because we're looking at where price has shown us that it's willing to transact off of over and over. You can see that we reacted, and now we have also reacted. So this price point of $7 right here, this is $7. $7 is clearly a very important price point for Peloton for whatever reason. I don't know what it is, but it's a decision area. And we're seeing that we have crossed over $7. And so if we kind of zoom out a little bit here on the daily, maybe even the weekly. Yeah, here we go. So weekly time frame, we have seen that from a technical analysis perspective. I don't know if you guys have been seeing this from other educators where we talk about downtrends. We talk about consolidating markets and then uptrends, right? Downtrend, very easy. You guys already see is that price is going down, makes a pullback, goes down, makes a pullback, goes down. Consolidating means that it's stuck, going sideways. And then uptrend, obviously, is we're going up, pull back, up, pull back, up, pull back, up, right? If you're following along, if that makes sense, drop a 1 in the chat. Pretty simple, but all right, cool. So there's two concepts that I always mark up in a chart, whether I don't mark it up anymore because I like to have my charts very like clean. Some charts you'll see that it's like a lot of squiggly lines and a lot of stuff going on. Personally, it's not my style. I like to keep things very simple, clean. So I'm not going to mark it, but when I was learning how to understand markets, right, you want to understand what trend we're in, right? And so obviously, like you see, like from this major high right here, we came down, pulled up. Hold on, let me do this cleaner. Came down, pulled up, 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 and so forth until we hit this low right here. Okay, so whenever we are pushing price in the direction that it's already been in, like if we're in a downtrend, right? Like, okay, price is going down, down. Okay, we're in a downtrend already. There's two concepts. Number one is break of structure. And number two is shift of structure. These are like simple things that, dude, here's the thing. Like, I don't expect everybody here to get started with Akashx because I just know how life is. So if you just take away these things, like this will help you understand everything, any assets with just technical analysis. Break of structure and shift of structure. So break of structure is we're in a downtrend, right? So we go up, down, pulled up, down. So now we have a pullback. And when price breaks this low, that's a break of structure. Comes up, has this low, price breaks that. That's another break of structure. Price comes up, pulls down, and goes below this. That's another break of structure. Simple. Now, what's a shift of structure? Shift of structure is when we have been going in one way for a long time. And so you mark high, 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 high. And a shift of structure is where price goes and breaks the other way. If that makes sense, let's drop a 2 in the chat. So we've been breaking, breaking, breaking. But here is the first time we have a shift of structure. All right, appreciate you. A shift of structure cannot always be trusted initially because that could be a big fake out that ends up coming lower. How would you know, Rich? You can never fully know. That's why we use things like stop losses. That's why we plan our risk. Because, for example, you see that price was coming down, comes up, comes down, comes up. And then here we shifted structure. And then what happened? Price ended up coming down again. So this was a big fake out. So again, it's not that it works 100% of the time always, but shifts of structure can indicate to you that it's time to get into the opposite trend. So if you were selling Peloton stocks, like, shorting it, this is probably an indication that you should stop. If we're buying it, this is a really good indication for buying. Why? Because again, if we look from here, we went down, pull back, down, pull back, down. And now what happened? We shifted slightly here. And now we've shifted the very obvious highs right here. Look how we shifted there. And that's why I think we're seeing price this week, like we came back down a little bit, but look how we're respecting that right there. So from here, this is like not a bad entry at $8. Again, here's the thing. If you get in at $8 and it comes down to $4, whatever you invested will be cut in half if you decide to sell it. If you decide to hold it and it comes back up, then you're good. So that's why I tell you, ideally, I'm good because I've been gotten down here, but I can't change the past and this is what it is. But why am I saying, oh, Rich, but you're so far up in profit, why would you recommend us to get in now? Well, because of where we're projected to go. And, sometimes people say, oh, yeah, we're projected to go to here, like Bitcoin. Like people tell me, oh, Bitcoin's going to 250,000 or 500,000. I don't know how people come up with that personally. Like I've never tried to project. I don't understand the method behind projecting. So people can educate me, and I'm 6 years into the game. I don't know, but I don't try to project something that's never been done. Like where something's never been before. Like, oh, astronauts are planning to go to this solar system by 2050. It's like, how do you know that, bro? Like y'all haven't even gone back to the moon in that long ago. How are you gonna tell me we're going to another solar system? So that's how I see projecting price. When someone tells me, "Oh yeah, this thing's gonna go to da 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 da," I'm like, I don't know. I just feel very confident with where price has been before. So when I tell you guys my projections for Peloton, I feel like they're very reasonable if the company can just recover, like by selling good products at a decent price. Now here's why. What did I tell you guys before? Peloton was at its peak $170 a share. So think about it. From $170 a share to $3 and now even at $8, guys, that's like a complete failure. Like that is like a complete crash. So if the company is now from a fundamental perspective making deals with big distributors, doing big sales, partnering with Costco, they got NFL stars promoting it again. The fundamentals are looking pretty decent. Oh, I didn't even tell you this. Peloton CEO change. Just recently, Peloton, new CEO, they came from Ford and they came from Apple. So they got the CEOs from Ford and Apple to take over. So they changed leadership as well. So it's not like the same old energy, same old guy. Like you have a new CEO who's going to be trying to prove a point, trying to shift things around. So that's like the perfect storm of stuff lining up with that. And so all I'm saying is I don't expect the company to make a new all-time high. I don't expect them to take over the world. I think if they can just recover not even half of the company that they used to be, if they can just be 20 to 40% of what they've used to be in the past, what happens to our investment? Well, again, even if you get in at $8 now, half of the shares, like half the price of what the company was at its peak, would be like $85. 85? Yeah, it was at 170 a share. 85 times 2, I'm pretty sure is 170. So at $85 a share, the company will be half of what it used to be. Now, I'm going to be even more conservative. I don't even think it's going to be half of what it used to be. What happens if the company can just get to being like $45 to $50 a share? $45 to $50 a share, it's like, yeah, less than 40 to 30% of what it used to be at its peak. So I'm not even telling you it's going to be the next biggest, hottest thing. I'm just saying that they're going to recover to kind of what they used to be like, somewhat. And the technicals can support that if the company can actually fundamentally make it work, because something that I talk about is this thing called imbalance. So imbalance on the charts looks like these big like candles that go either, down or up. So like in this case, you have this huge down candle like this. And so there was no buyers in this range right here. There was nobody buying the stock from this time at all, like from $47 to about $82. Now, I can go really in depth. We're not going to do that of like how you look for these things and whatever. But if you go on charts and you look at these big candles, you'll notice that literally always, well, at least with the established assets that will go back and forth 100%, they will always gravitate towards these imbalances 100% all the time. Now, the only reason why Peloton wouldn't get there is if the company bankrupts, just disappears, they sell it, they scrap it, it's dead. That's the risk. I think it would have happened already, and I don't think it'll happen now that they just did these commercials. They just have a holiday planned. They're partnered with Costco, and they changed their CEO. So from $8 a share to about, let's say 40, that's a 5x on your money, if I'm correct. From 8 to 40 is a 5x. So if you put 100, that's 500. If you put 1,000, that's 5,000. If you put 10,000, that's 50,000. If we get to $50, or I'm sorry, $40 a share, getting in at 8. Blessed that I got in at 350, 350, to just 35 is already a 10x. So if I get to 50, it's like almost 20x. And in cryptos, like meme coins and stuff like that, you can get those type of returns, but they don't just land on your lap. And a lot of them are like rug pools, and you got to be careful that they don't like scam you. Like, it's not easy to find something that even doubles your money. So honestly, like the fact that I damn near tripled already at its peak here at $9, like that's already a massive win for stocks, if you ask me. Because a lot of people are just looking for like not even a doubling of their money, in the stock market. So you can see it's a very well thought out investment. And it's not just to show you guys like I'm showing you the play to give you something that you can decide if you want to get into it and why, right? But I'm showing you like the thought process of a trader. Like what do we look for? What's our assessment of risk to reward? Like at the end of the day, everything is about you got to invest into something in order to make something. If not, go work a job. You know what I'm saying? Like if you work a job, you do the work, you get paid, period. But in investing and trading, it's about risk and reward. If you're not somebody that's going to take risks, you can't have rewards. It's just not how it works. So this is something that I'm willing to take the risk on the capital that I put into it because of the potential upside. And also, I'm not going to cry if I lose it. I don't want to lose what I invested in it. But, you know, so at the end of the day, this is what you guys want to do when you trade. Like when you invest into cryptos, when you invest into stocks, get a picture of why you're putting your money there. When we trade NAS and we trade gold and this and that, our thought process is a little bit more technical and very small time frame oriented because it's day trading. We're in and out, And so we'll talk about that now real quick with NAS and wrap up the session. But this is like what you get with being in Akashx. Like we don't always have the time to do research or to even know where to start or where to put money into. And again, I'm telling you the same way I will tell my students that anytime we take something, I'm not guaranteeing you that we win at all. But I'm only going to tell you what I'm going to do. So we're going to win together, lose together. And if we're in positions that we are to teach, it's for a reason. Again, like it's easy for me to show off or like tell you, oh, I'm already tripled up, da da da. But like people in Akashx that found out about this months ago were able to take this with me. So it's not like, I'm giving you this play now and like you're gonna get plays like this in the future over and over, if they come up. So that is that. Let's kind of fast forward now to NAS. All right. Da, 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 da. Okay. So so we called out a couple trades today. Number one was the one that I dropped in the free trial chat. And funny enough, so I called out two trades. One of them was on the free trial, the other one was for Akashx. And both of them were winning trades where people made pretty damn good money. And technically, they were the wrong trades. Now you're probably like, what do you mean, bro? Well, for me, I'm always trying to find on NAS on a daily basis the move. Like, what's the move? So for me, like the move was buying today because look how much the market moved up from here, right? Now, the two trades that I sent happened to be sells and they won. But what I was catching was basically the pullbacks. And so ultimately, they weren't the best trades that I could have caught. And that's what's cool about the strategy that I teach. And, our philosophy is not just, oh, you have to only take tap to trades and only take trade alerts. You can also learn how to trade for yourself by adapting the strategy that I've taught. Now, I'm not going to, teach the strategy on here just to respect the students that pay their membership. Like at the end of the day, they're going to get the real 100% sauce. Okay. But there's these little red boxes that are very important to my strategy, and they're going to create the entry opportunities for buying and selling NAS based off how I do things. So essentially with NAS, what I like to do is wait for 9:30. Now, the reason why we wait for 9:30 and 9:30 a.m. Eastern, by the way, is because that's when the stock market opens. If you look up something called the New York Stock Exchange or NYSE opening bell, you will see, well, let me put time, 9:30 a.m. All right. So NASDAQ, what NASDAQ is, what's the link to sign up? You gotta get in contact with whoever shared this with you. Okay. So whoever, put you onto this free trial, you want to message them. I want to make sure that they get the referral and the enrollment. All right. Let's all be ethical, guys. At the end of the day, we're all building businesses. We're all, obviously eating off referrals. So it's only right that you just reach out to whoever shared this with you. They will provide you with everything. And regardless, guys, of whoever you sign up with, you'll still get access to all the traders, educators, and leaders that you've been seeing on this showcase, and you haven't even seen half the staff. All right. So just do the right thing, sign up with whoever shared this with you, and plug in. All right. Let's move on. So boom, boom, boom. Okay, so 9:30. Why is this important? Because NASDAQ, what it is, it's an index, and an index is basically like a compilation or a grouping of something. And in this case, we're talking about stocks. So NASDAQ is basically the biggest tech stocks. So, okay, let's do this, right? NASDAQ stock list, right? There should be a really cool picture here. Oh, I love this one. Okay, I love this one. So this one shows all the companies that comprise the NASDAQ, okay? Let me admit here. And so you'll see, really, there's just 7 that really matter the most, all right? It's Microsoft, Apple, Alphabet, Amazon, NVIDIA. This isn't even really updated, by the way. This is like I think this is June of last year. So most of this is pretty accurate, but NVIDIA has definitely taken a jump up. All right. So, but overall, these are the major players still to this day. Meta, Tesla, NVIDIA, Amazon. So this is tech. See? All right. So we'll get off that. So when we're talking about stocks, we want to wait for the stock market to open to trade it, if you ask me. There are times, because as an index, you can trade this around the clock because it's forex, right? Like forex related. It's the NASDAQ versus the US dollar, right? So you can trade this at 2 in the morning Eastern. You can trade this at 7 p.m. Eastern right now. You can trade this in the morning. Like there's no time you can't really trade it except the weekends when the market closes. But there's a reason, like, okay, for example, if you are working at, let's say you work for Starbucks, right? And if you work for Starbucks, but you're not paid by the hour, you're paid every time you sell a coffee. But you're advertised and people are only out in the streets to go visit your Starbucks from 9 to 5. But you, because you got bored at home and you're like, I want to make some money, I'm going to show up to my job at Starbucks at 12 in the morning and I'm going to wait for customers to walk in the door. You're going to not make that much money because there's nobody there to do business with you at that time because you're advertised and you're doing business from 9 to 5. What does it have to do with what I'm talking about? Well, there may be a day where at 12 in the morning, there's a concert down the street and everybody for some reason wants water, coffee, some snacks or something. And that day you make a bunch of money at midnight, but like that almost never happens. Okay, well, that's what happens when we try to trade NAS now. Like basically like at this time right now from like 7 p.m. Eastern until about 1 in the morning, it's called Asian session. So there's times to make money and there's times to chill out. If you notice these little red boxes, look how they just go sideways almost always. Again, not 100% always, but almost always, right? You can see this thing just go sideways, sideways, sideways. So are you going to make more money during that cycle or during this cycle? Clearly this cycle. But why did the market move so much here? Because the stock market opened right there and dropped at 9:30. That's what those little yellow lines are. So I teach people to like just, this is a good thing because you're going to maximize when the market's actually ready to make you money. And also it builds your discipline to get the hell off the charts. Because a thing that happens to a lot of people when they start is that they want to be in a trade all day, every day. You're gonna get burnt out. You're gonna lose money. It's not gonna be what you think it's gonna be. I'm just gonna be honest. And this is just my opinion. At the end of the day, there are people that like to trade around the clock. So who am I to say? But at least with NASDAQ, because it's the stock market, almost always your best bet is just to chill and wait for that window. Again, there's going to be some days where there's financial news, things like that, where you might want to start trading a little bit earlier, whatever. I'm just telling you what I do, right? And with this strategy, we're either going to take sells or buys around those levels where we start breaking out or faking out that red little zone. Now, it's not just that simple. There's other factors that we talk about, which are called smart money concepts, supply and demand, things that I teach about on the educator training series, as well as other educators that use similar concepts too. So you can understand the whole picture of how we put it together. But what makes me like my signature thing is playing off of these ranges in accordance to those other concepts. So basically, the trades that I called out were the sells here for the free trial right here. And then on Akashx, I called this high right here where we were reacting off of this supply zone. So essentially we caught this pullback and this pullback. So that's why I told you, like, we made money together and we won, but I technically was wrong in like the grand scheme of things of how we could have made more money. But that's the cool thing, is that this is a strategy where even if you're wrong, you can still find a way to get paid because these areas are very sensitive and they can create big opportunities for you. So whenever we get in and out of those red boxes, depending on what the market is looking like around there, we buy or we sell over and over. And it's not just that easy. Like if I told you the whole strategy for free right now and you tried to do it, like I'm 95% or more sure that you'll probably still end up finding a way to mess it up because it requires practice and there's a lot of details that I talk about on these sessions. So I'll have to leave it at that. But this was the trade we caught together, and this is the trade that was called on Akashx. And so even on a crappy day where I didn't even catch the big move, we still made money together. Go figure. The other day, so shout out to Joseph. Joseph called out the buys right here, and I called it out on Akashx, and I was going to send it on the free trial, but he beat me to it. But I was so happy because I'm like, okay, if Joseph sees what I'm seeing, like this trade's going to go great. And it did. So shout out to Joseph for catching that one and sending it out. But again, based off what I told you, you can see this red box, price broke above it. We called the buys here, took off to here. So I'm personally 3-0 for the week. Glory to God. I don't even take credit for like the moves that I catch in the market because at the end of the day, guys, I just really put in a lot of years into like seeing tendencies in the markets and just finding a time and just things that were consistent to me. And I just follow the rules of the strategy. So it's not really me, it's the strategy that's great. And that's what you have to understand, is that you guys can absolutely become the next great traders, whatever, if you follow the systems. Systems are what make people great. Everybody that has very successful businesses like Amazon with Jeff Bezos, like Jeff Bezos is only as good as the systems that he's built. So traders, we just build systems and follow them. I think the separator is how disciplined and focused you are to actually execute your system better than the 95% of people. Because of why? Things like fear and greed. You're going to see the setup, but you're going to hesitate. You're going to see the setup, but over leverage and over risk your account. A lot of different things, But this is a very simple strategy that's very visual. Again, I'm not using any indicators, which I'm not saying it's bad to use them. If you have a strategy that relies on it and you're good with it, hey, power to you. I personally just look for this red box. And I understand other things like market structure, shifts of structure, all that other stuff that you'll learn. And we put those things together to catch big moves or little moves. Some days we catch little moves, sometimes we catch big moves. But overall, the people can say that I think we make some money together. So That's really it for like a little bit of the strategy. I gave you a play that you can decide to, tap into with Peloton if you want to. Again, that's something that may take months and maybe a year plus for it to play out. So I'm telling you, like, you just gotta leave that thing in the back burner and forget about it for a while. If you're gonna take it, that's not a day trade. So you're gonna be on a roller coaster with that thing for a while, just like me. All right. I've been in it for months. But if you guys have any questions, like pertaining to not signing up or anything like that, just like, I don't know, something simple, basic stuff that maybe you need help with or that everybody probably needs help with, I can maybe answer just a couple questions and we'll wrap it up. I like to bring it up because it's the last one of the day and I don't want you guys not knowing something heading into day 3 of the trial because we're like almost halfway done. We're halfway done already. Pretty crazy. What's the name of the indicator? You gotta join Akashx, man. You gotta join Akashx. And I'll tell you. I'm not trying to be petty. I'm really not, but it's just like I always put myself in the perspective of the people that invest into the platform, man. And it's like, you know, at the end of the day, even if I give it to you, like it's not gonna do much if you don't understand how to use it. But and again, I'm like super anti-petty, man. I have a lot of free stuff on YouTube, a lot of stuff, but plug into the sessions. If you're in Akashx, then for sure just message me. You guys know I'm on the chats all the time. I mean, it's on my sessions, on my educator training series. I have the PDFs. Like you should have it already, honestly. But you can message me. How can you analyze the change of price going down in a sell? And I don't really know what that means. SL to BE means stop loss to break even. That's a great question. This is actually very relevant to like the trades that we're taking. So here's a great thing, right? Okay, perfect example. I called out this trade for you guys at 20,630, I believe was the entry price. If it wasn't that, it was like off by like 1 digit. So basically that. Let's go and hit bar replay here real quick. My God, there's way too much happening here. Okay. Bar replay. Boom. Okay. Let's play one candle. Here we go. All right. So this trade, we saw that I called it. And in like 15 minutes, we got a big drop, kind of came back a little bit and then dropped again. And this was as far as it got. So we hit TP2, all right, for a 500 pip gain right there. And at that point, I always tell people if you're up at least what you're risking, or if you're just up like a decent amount, make sure that you move your stop loss to break even. You move your SL to BE. Because what happens is like you put on an initial risk into the market, right? And you're up in profit. The worst feeling is when you're up in profit and then that thing turns around on you and actually makes you end up with a loss. So how can we protect ourselves with that? Well, again, the stop loss that we originally had up here, which was a 500 pip stop loss, the minute that we're up, like let's say we hit TP2, right? And this is not like you have to do it. It's just it's called trade management, and it's just a smart thing to do. Is you take that stop loss on Trade Locker, you can just delete it or drag it. So Trade Locker is really like user friendly. Like you can literally click on the trade, like on the stop loss, and just drag it with your finger if you're on a phone, or just click and drag on the screen if you're on a computer. Very like super cool. You just click it and you drag it here. So I wouldn't drag it exactly where you're getting in at. I would drag it slightly below that. And the reason why is that whenever you're in a trade, the broker is always going to take a cut of your position. So there's something called spread. So you always, when you're moving your stop loss, you want to just put it like slightly in front of it like that. And so what happened after, which we can never know if this is going to happen or not. That's why you have to take the risk and manage the trade as it develops and just hope for the best. So some people, they took profits here. Some people closed some of the profits there. And then this thing ends up doing that. And so boom, we get taken out of the trade at break even. Now, obviously, it sucks if you were in profit and then you made nothing. But guess what? That plus minus zero gain is a lot better than the aftermath, which was you lost $50. You lost $1,000. I'd rather lose 0 than lose 1,000 every time. Because guess what? You can get into more trades. So, guys, when you make money in this, you got to protect capital first and then make profit. Protect capital first, then make profit. In that order. Should the stop loss in a sell always be higher? Well, naturally, whenever you have a sell, the opposite direction is where you lose money. So it's always going to be on top. Always. There's no way to put it below. The system won't even let you do that. You got to get in profit first for it to even let you do that.